Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. I've got a really amazing guest, and I'm super excited to have Erwin on. I've known Erwin for years, and we've talked about having him on. It just never happened with our schedules. But Erwin has an amazing story and an amazing product, actually, to talk about today. So, Erwin, first, I'd love to hear your story, and then we're going to tell people how they can qualify and acquire stock market assets with 25% down.
First off, thanks for having me on, Scott. We've known each other forever.
Yeah.
You were doing my mortgages over 10 years ago.
Yeah.
And I love that we still continue to work together, helping people mostly invest in the state side. But just briefly, I'm a child of immigrants. It's always, I don't know what it is. It's always been in my nature. I wanted to get ahead in life and I always wanted to be rich. So personal finance investing has always been a personal interest and passion of mine. I went to business school. Sadly, in business school, it taught us nothing about real estate.
Yep, true story.
And when the dot-com bubble killed my stock portfolio, I got I started looking more at real estate investments. My girlfriend's father gave me the book Rich Dad Poor Dad. And understand, holy cow, I went to business school. Like, holy cow, I did not know that business owners have all these tax benefits. And basically, it almost as if the tax code's written for people to run businesses, including invest in real estate. Because investing in real estate, when done as an active owner, essentially it's just running your small business. So all this is a no-brainer. And then I could do the math, right? Stock market, I was expecting, 6 to 10% returns, passive, right? Real estate, I was underwriting only 3% appreciation. But at the time, we only need to put down 20% down. So I could do the math. So 3% appreciation, I'm only putting in 1/5 the money, basically times 5. So my expected return should be around 15%. So I can beat the stock market being a real estate investor. So it's a no-brainer for me. And then the journey for real estate investing went for quite a long time. I've had significant interest in over 40 properties. Just recently, I had an 8-figure portfolio here in Canada. It's been nearly slashed in half because real estate in Ontario has been very painful for me and my clients. Hence, I've been divesting and allocating resources elsewhere. I bought a house in Texas just 2 years ago and allocating some more money back into the stock market.
Which is super cool. And I love that you started with Rich Dad Poor Dad, because that is honestly the same way that I did too. It was a book about finance, and I was interested in financings, or finances, I should say, not financing. And someone said, oh, you should read Rich Dad Poor Dad, right? So I read The Wealthy Barber, and then I read that, and I'm like, wow, this is incredible, right? And it just opened my eyes to a brand new world that I never thought. So super cool. So yeah, and I think it's quite unique too that you have such a history in real estate, right? Like you said, you've built up an 8-figure portfolio. You've had vested interest in more than 40 properties. And then now you have a fantastic product for the stock market. So it's a little bit of a diversion. And I'm sure it's, for the better. And I would love to hear more about the product. I did hear you speak about it once publicly, and I was actually shocked about what you had to say. And I'm like, you know what? Like, let's connect and let's put this out there, because I think that's important. So why don't you dive into how somebody can actually acquire stocks for 25% down as opposed to 100% down like we are used to?
Right. I should also mention that I've been a licensed realtor in Ontario since 2010 at Rockstar Real Estate. I've been a very proud member and coach of Rockstar Real Estate Brokerage since 2010. So also I've run a team. And so with my team, my clients and I, we've helped local investors transact on close to $500 million worth of local real estate, all investment properties, no pre-construction condos. So very proud of that. So I make money selling real estate, specialized in investment properties. And I was literally just having a conversation with my kid cousin yesterday who's looking at buying house hacking. I'm like, don't do it. He's looking at buying a house and house hacking. I'm like, don't do it. Before I get into the stock stuff, just quickly, I said, where you're investing, not much appreciation. So the only way you make money is cash flow, but you're dependent on the tenant paying you rent. Because if they don't pay you, you are screwed. So how is this a good investment? Right? So here, run some numbers. Just like I mentioned earlier, to me, real estate used to be a no-brainer, 3% appreciation. I know people who are listening to this are thinking more like 4 to 6%. Let's just split the difference, use 5% appreciation for real estate. If I was to put down, now the stock market historically, when I say stock market, I'm old school. I read books. I'm a big fan of Warren Buffett. Not everything he says, but keep it boring. Let's just talk about the S&P 500 as a stock market. S&P 500 has about, well over 50-year history of returning over 10% compounded annually every year. That's an average, right? So if I could, and so when I learned about this, the possibility of having to only put down 25% to control essentially a fund of that matches the stock index, the stock market, anyone should be able to do the math. If I can earn 10%, but I only have to put down 25% down, basically it's times 4, right? So my expected return should be 40%. And that absolutely eclipses anything you can do in real estate without having to, get a mortgage, have tenants, yeah. Right? It's headache free because it's basically every real estate investor knows if real estate only beats the stock market because you can leverage it. We all go to you to get a mortgage. But if you're going to cash buy investment properties, like that doesn't make any sense, right? Just invest in the stock market, let it be headache free. So again, this is pretty new within the last 2 years that it's now possible to actually borrow money to invest in the stock market. So 75% loan to value. In turn, I only need to put down 25% to invest in essentially the stock market.
Which is super cool. It's super cool. And you know what? You nailed it when you said that. So like during my journey of building my portfolio, I was actually really busy doing mortgages. And then even though I had property management and I had a team of contractors that did renovations and repairs and stuff, you're still needed. It's not as passive as you want unless you invest in share actually. But doing it in Canada through, the team that you can build here, it took a lot of time. So I actually was like, you know what? I'd almost rather invest in the stock market, or partially, you know what I mean? Like diversify, just to make my life easier. So I don't have to deal with tenant issues. And, you're right. This does it. So can you tell us more? Like, how is it even possible to buy, $100 worth of stocks for $25?
So let me just take a step back as well. Like what you shared is actually very, very common among our clients. And for those who don't know, most people don't know who I am. Most people know who my wife, Cherry Chan, the famous YouTube accountant. She really got recognized by a stewardess on the Air Canada flight back from Hong Kong.
That's cool.
I know you from somewhere. I know who you are. You saved me a bunch of money.
That's awesome. Super cool.
Anyways, so between Cherry and I, our clients are consistently feeling stuck. And when I meet with them, what I see is that almost all of them are well over 90% concentrated in real estate of their investment portfolio, of their investment money, of their net worth, concentrated in local real estate, generally in Ontario, and it's all residential, almost all residential. And so a lot of people are not happy with that. So just even from a pure diversification play, because I don't think any financial planner in the world, the greatest financial planner in the world, would never tell you to have all your assets in local real estate in one currency, one country.
Yeah.
Fair enough?
Yeah.
Right?
I agree. So, no one would say that.
No one would say that. So then I show them, here's an option. Like, for example, the richest people in the world usually have a good percentage of their wealth in the stock market, at least a quarter. Right. So let's start with funny how quarter keeps coming up 25%. So to answer your question, how is this actually possible? Like the nuts and bolts of the investment is actually, to take a step back. Everyone knows what a mutual fund is. I invested in them only when I was forced to through a company plan. I just never liked the fees. It never made any sense. Anyone who studied financial planning or personal finance knows managed funds almost never beat the index. Warren Buffett famously offered $1 million bet for any hedge fund manager to beat the index. If they beat it, he would donate $1 million to their favorite charity. One person took him up on it, and they lost quite badly. They actually lost before the end of the term. They actually gave up before the end of the term. So it's hilarious. Point is, why would I pay more money to make less money?
That's right.
Right. Now, that's just mutual funds. Now, and then when the concept was introduced to me, insurance companies have their own version of mutual funds called segregated funds. So what's different about them is the majority of those funds that the insurance company manages they guarantee return of principal of 75%. And because these are some of the biggest companies we have in Canada, because of the quality of the guarantee, there are lenders willing to step up and lend 75% loan to value. So I can go put down, for example, I can come out of pocket, for example, $25,000. I can borrow $75,000 to invest in the stock market. Now, even though I'm out of pocket only $25,000, I now control $100,000 worth of the stock market.
And I'm sorry, no, but you just said something there that I thought was super cool too. So you're saying they're going to guarantee 75% of the principal. So they're going to guarantee 75K of your 100K investment. So if the market crashes, let's just say, right? Because I know some people are concerned with that, with everything going on. We're recording this at the beginning of 2026, right? So you're saying beginning of 2026 that I can invest 25K to buy 100K, and 75K is protected and guaranteed, essentially.
Yes. So at risk is your investment.
Okay.
Right. But also, real estate investors need to remember this seemed to be forgotten for a while because it was just a bull run for, you and I have been in for a long time. So it's been a bull run. Is that in real estate, you can lose beyond your investment. People are like pre-construction condo investors, for example, are learning that you can lose beyond your investment. Your losses are capped.
You're right.
But
And
also,
it's a cycle. Like it's a cycle, but you're right. Yes. We see people that purchase in the past 2 years. We're seeing in certain markets, their values are less than, what they paid. And I can kind of see that maybe turning around hopefully soon. But yeah, so we are seeing that, but it's a cycle. But I like that you have that protection because when you buy a house, nobody guarantees 75% of its value. So that's cool.
And you've been around long enough to know as well, every time there's a crash, it's probably a buying opportunity. Right? And I'm not saying everyone should put all their eggs in one basket, but I'm talking about like much smaller numbers than someone has to do to get into one real estate investment property in Canada, right?
Yeah. Now let's say, okay, I want to do this, or somebody listening that's, they want to do it and maybe they've only got $5,000. Like, can they still do it with that little, or is there a minimum?
The minimum lend, because the lenders, you're a lender, you understand. They're in this to make money too. So the minimum lend, I think, is, I think the total investment has to be $50,000. So that works out to like, the minimum investment basically works out to be like just around $17,000 that someone has to come out of pocket for investment.
Okay. So that's reasonable. That's definitely reasonable. That's, a lot of people have that. So that's great. So then that's the minimum. And then, tell us more.
Yeah. Again, everyone understands mutual funds. There basically is a complete other world in the insurance industry. Again, these are called segregated funds. There's thousands of options, right? So, but again, for easy explanation, I like to keep it simple. Let's talk about the stock market. I know many Canadians think the stock market is the TSX, which would be wonderful if they had invested in the stock in the Toronto Stock Exchange. I believe it's up 36% in 2025. So imagine if you leverage that.
Yeah.
Right? You're talking That's well fantastic. Over 100% return. And I'm not saying don't be a landlord, don't be a real estate investor. But for people, again, looking for some diversification, something that's headache-free and passive, this makes a lot of sense. And again, this is headache-free. It's all paper-based. It's also liquid as well, right? And here's the fun thing as well. You can BRRRR this as well.
Yeah.
So your audience understands BRRRRs, or
absolutely
right. So let's go back to my example of I came out of pocket $25,000. That's my down payment. So my total investment's $100,000 in the stock market. Say the stock market goes up $10,000, right?
Yep.
Now my return is $10,000 on a $25,000 investment. I can actually I probably need a bit more money, but I can re-leverage my profits. So give it 2 years, for example, make it $20,000 my equity gain. I can now take that 20,000 and leverage that, right?
Super cool.
Yeah, and borrow 3 times, so I can borrow 60,000 and deploy another 60,000 in the stock market based on my initial investment of 25,000.
That's super cool. And I know you talked high level with Jillian. She let me know, but Jillian is actually setting up people's primary residence. There's a lending product that allows them to turn their home into a tax write-off. So she actually sets them up with that. And then with a combination of what you're doing, I actually think that would be fantastic. So you could make your home a write-off. You could leverage it, buy these items, which you can then re-leverage to buy more. I think obviously there's risk with every investment.
Yes.
But I can see that as a huge acceleration, like phenomenal. I actually love it. I think it's really cool.
Yeah, and it's very scalable. The lending is extremely scalable. The lending stops at 2 million per person per corporation. So it's quite some time until you run out.
So if you have different corps, does that still exclude you?
Your spouse, your kids.
Okay.
Right?
Okay. Super cool. So then, like, how does this work? So obviously, I'm not. Sorry. I was just gonna say, like, we're licensed for mortgages. So you must have some type of investment license, right, to be able to offer this to people?
Yes, I haven't been doing a good job of being public about it. I do have my license, my insurance license.
Okay, super cool.
So again, as part of our service to our clients, the thing is, just like the clients that you run into, just like people like Jillian, people in our community, a lot of them are first generation wealthy.
Yep.
And now they have all these assets, and they have kids that they want to be able to transition those assets to as pain-free and tax-free as possible. So they're looking for estate planning, and also they're looking for alternative investments outside of real estate investing. So I have my insurance license now for that purposes, and segregated funds, like I mentioned, are an insurance industry product. Hence, I'm able to offer them and talk about these things. Right? Super
cool. And I know verbally and in public, right, especially in real estate and just different things, we're not allowed to quote returns. So I want to make that clear.
Never predicts the future.
That's right. But I love the fact that at least there's that 75% loss protection sort of built in. I love that. And then the acceleration, right? How, again, you could tap into your home, get just the minimum needed for this loan to move forward. And then you re-advance that. Yeah, that's super cool. Yeah. So I love it. So for those that are listening that would be interested in seeing what this looks like, and actually, you know what, maybe before I ask you that last question, within these segregated funds as an investor, can I select what I'd like to invest in, or do you select, or like how would that work?
There's thousands of funds to choose from.
Okay. So you can pick and choose. Yeah.
You can pick and choose. But, like I said, Warren Buffett, and anyone can go search this up. It's very uncommon for any fund to beat the S&P 500.
Yeah.
And also what I like about index funds is the management expense ratio is the lowest possible.
Yeah. I learned that when I worked at the bank. They had their own mutual funds. They wanted us to sell because it was profitable for the bank. But when I started at the bank, I was already a real estate investor. So like I knew about investing. So I was like, this is junk. I don't want this. And I'm sorry, all you banks who are hearing this. I mean, mutual funds they suck. But I would invest, and still do to this very day, into index funds. Cause you're right. It's very hard to beat the market, but if you buy the market, right, you can ride those returns, and they have really low fees. And so no, that's incredible. So I love that product is into there, because I've seen some life insurance products which force you to invest in mutual funds. And I didn't like that, right? Because it's the same thing. It's the fees. So,
but as soon as you add the fact that you can leverage, because only this segregated funds was introduced to me years ago, but I had no interest because the fees are high.
Yep.
But because the fees are high, I can leverage it because the insurance features built into the product.
Yeah.
And I should also add, because the insurance features built into the product, it acts the investment as acts like insurance, as in it bypasses probate. So, for example, your beneficiary, so when I pass, my segregated funds are liquidated, the loan is paid off. My beneficiary would have cash in days.
Love it.
So yeah,
I love it.
yeah. And what else? Yeah, and again, anyone listening to this, for example, and again, I'm running into this all the time. Again, I have 350 past clients in real estate investing. What I'm also finding is about 90% of the kids do not want anything to do with the parents' real estate portfolios. I'm talking about Ontario. I'm talking about local real estate investors. That is.
Yeah, that makes sense, right?
If you told a kid, here's a portfolio that's going up 20, 30, 40% a year, that's not providing you any headache.
Yeah, you do nothing. You just don't cash it out and ride the wave. Yeah, I like that. So, well, we've got to wrap up because I try to keep these short. But so somebody who's listening to this, and we'll put the details in the show notes as well. So if you're in the car and you can't take this down, but how should they reach out to you? What's going on? I know you've got an event coming up too. That potentially people could join. So do you mind sharing how people can contact you and maybe a little bit of details about this event?
Yeah, my website's infinitywealth.ca. When we thought of the website, the Avengers was all the rage.
Yeah.
So play off the Infinity Gauntlet. Yeah, so infinitywealth.ca. My name is extremely unique. You can find me on social media. And then all my links are there as well. We do have the Wealth Summit coming up on Saturday, January 31st. My wife, my much more popular wife, will be presenting on estate planning, same with myself. A lot of lessons learned from, I've done over 40 paid consultations around estate planning and wealth planning. So sharing a lot of lessons learned from there as well. And also we have a special guest, Leslie Kinsey, who has gone through, she has a family business, and she actually wrote a book about how it was the transition from taking over the family business when her father passed, including the real estate portfolio, and how it's not that easy. So it's that saying, more money, more problems. That's that's something that in general, I don't think people have thought enough about it. I'm still shocked how many people I meet who do not have a will, and yet they have children, right? So, we're going to cover some of the basics. We're going to cover some of the advanced topics around estate planning so that people can, again, make more money and, just as importantly, transition as much as possible to their kids.
That's awesome. And then I think you said your in person is sold out, but people can still purchase the online tickets. Is that right?
Correct. Yeah. Okay. We always warn people that the in-person sells out usually in days, and it does. Anyone who wants to attend virtually or get the recording, if they just buy the virtual package, and I think we're offering for like under $30. So they can buy a virtual ticket, they'll get the recording. Yeah,
it's very fair.
I said, it's very fair.
It's the cost of a book, and then but you're covering topics that are much more valuable.
Yes.
So that's incredible. So
yeah, like anyone wants to try to meet with their accountant, try to meet with them, have a 3-hour meeting with them for less than $30. Good luck to you.
Yeah. Exactly. Love it. No, that's awesome. Well, thank you so much for joining us, Erwin. I'm so glad that we could do this and, spread the news about this product. I think it's incredible. Like I said, when I saw you present on stage, there was, I think the room had probably 80 investors in it. I don't know precisely, but I saw that and I'm like, this is an incredible product. Like, this is awesome. So thank you so much for sharing it on here with us.
Thank you, Scott. Thank you for letting me share this on your platform. And I look forward to doing much more mortgage business with you in the future.
No worries. Thank you so much. Okay, good.